Alrighty, Doc here. Good morning. It's a Monday. Good morning, good afternoon, and good evening somewhere, that's for sure. Monday, TGIM. Thank goodness it's Monday. Alright, let's take a look at it today. Let's see what we got going on. You can see the dollar index up on J4X showing, we were playing with the minute, that's right. Let's go back to the daily at least. Right there, we're trying to show you the insiders trading going on as usual. And usually it works, and it worked again on Friday. So you can see there on the dollar index on our beta, moving up again. Let's put the weekly up there. You can see the weekly still in a weekly buy. Let me just double check over here on the platform we use right now, sending out charts to everybody. Let's see. We'll go right there. And we go right there, and there that is too. Let's put that up on your screen. Right there. Bang. Okay, so to start off with, let's look at it on J4X. You can see that strength and that spike. Mr. Powell reminded everybody last night on television, you know, that old-fashioned toy, that he is not going to lower rates in March. And maybe not necessarily in June. And then you can see right here, it just needs to be fixed. Format. And we just go like that. And we go like that. And then we change the default to 24 hour. And voila. There it is. And you can see, oh, got to close that. Ta-da. And so there's that spike up from that news again, and it is amazing. You know, it's literally comical on some level that the markets in general just, you know, there's like two forces pushing against it, you know, at the same time. So what you have is, on the one side you have the Federal Reserve saying one thing. And then on the other side, you have this political situation going on where Mr. Trump is leading the markets historically. We've never seen anything like this. And so he's leading the markets by 7, 8, 9, not the markets, the polls, 7, 8, 9%. He's leading everywhere. And so, you know, we know what he did as a president. He was very efficient and very profitable, and, you know, it was very peaceful, and, you know, just all the positives out of it, minus listening to the U.S. media, of course, which is now basically bankrupt because of their, let's say, not reporting actual facts. So then we go over and take a look at the combination of the battle between the two. It's a very odd situation to see. You have one says, watch out. You know, I've seen money managers say it over and over. We have to see where November is. And they look at that and they say, okay, you know, what happens in November? And what happens in November basically will clarify the financial side. So we talked about this, you know, I guess about 4 or 5 months ago, with Janos, when Janos was saying, what stock should we look at, you know, down the road? If I was planning on buying something for 6 to 9 months out, what should I buy? And out of the 1 out of the 4 I suggested, you know, quadrupled, I guess you could say, in price. It went from $12 a share to 50 some odd dollars a share. The next day it almost doubled, went up into the 25s. Surprising someone's actually paying attention on. No, I can't say that. That's wrong for me to say that. But it's hard to believe that money managers are paying attention to me on this webinar that closely. Let's put it that way. You know, in other words, it's hard to believe that I suggest that one of these could really take off, and one of the 4 literally went from $13 a share up to like $26 a share overnight. And then, and it's just from experience. You know, I've worked in the hedge fund industry. I know what the general mentality is, you know, the idea behind their thought of buying and selling. And so I picked 4. I didn't even look at the other 3, whatever happened to them. I know one thing. The other three did not go bankrupt. So more than likely all of them are up because they're market managers, people who manage a lot of money. What they do is they're anticipating, 6, 7, 8, 9 months out into the future, what can be. And here we are in February, so that means February and March, or we could say basically March, April, May, June, July, August, September, October, and basically we're looking at the end of October going into the first week of November, and we're in the first week of February now. So basically you're looking at about 8.5 months tops, but it's basically 8 months. And so they are anticipating what the economy could look like with what statistics they have in front of them right now. And that's what the fundamentals are, is there's stats, and there's actual numbers that match up to what, in other words, it's earnings, the season, profit and loss, sales, gross domestic product, CPI. They look at all these things, they put them together, just like they were saying Grenlock was looking at unemployment. And we've talked about this last week. He follows this, this particular multi-billion, $100 billion manager says, I follow unemployment in each state individually. And he says 85% of the states are unemployment is higher, way higher than the national average. He says, and when you look at the other 15% that are not, they don't match up to the federal number. Okay? So we know that the fundamentals have been, we like to call it, in the hedge fund industry, we like to refer to it as being massaged. Like when you go to get your back rubbed or, massage, they're being massaged, okay? In other words, they're not necessarily as accurate as you would think, but they are something that the money managers follow. So that's where we kind of stand this morning. We have Mr. Powell coming out last night, again reminding us he is not going to be trapped by lowering rates when the economy keeps on showing very strong employment numbers. And we keep on reminding everybody here at Dukascopi's webinar that our employment numbers reflect more of not what's going on financially in the states, in the United States overall, but what the federal government wants to tell us it is, and the hiring that they do is over 50% is government jobs. So government jobs do not create a growth in America. They only reflect employment. And money managers look for growth. They want companies that are going to make more money this year than they did last year. They have more cash next year than they did this year. The basics, the basic profit and loss. So that is, I guess. There's Robin. Robin says, "Good morning. Have trade related questions? Ask Doc." Well, that's awful nice. Thank you. Good morning, Robin. How you feeling? I saw that last one with the electric boat. That was interesting. And I sent a response back. Basically, that's where we kind of stand at this point. And when we look up here on the dollar index, you can see that big spike this morning, right? Is that showing up? See my arrow on there? Or is it right there? Somewhere around there is an arrow. I guess if I go like that. There we go. You can see the arrow there now. You see that big spike. And that's, again, because, markets are trying to figure out how do you position yourself for the numbers we're seeing right now. That's what it really comes down to. As a matter of fact, I even seen somebody, a major, what was his name, Zuckerberg, who manages like CNN and all these crazy television networks that come out with some strange statements all the time. He was being interviewed yesterday, and I was kind of surprised. He kept on trying to dodge the question. The person interviewing him was saying, don't you see, the presidential candidate that's leading right now, there's a threat to democracy and a threat to the world and a threat to this, and he just kept on saying, well, there's over 50% of the population that don't see it that way. He didn't say no. He just kept on saying there's a lot of people out there that don't see it the way, and wouldn't even say the way we see it. He was really trying to hedge his bet because they've lost so much money, and they can't get advertisements, and that's how they make money. It's really hard for him to want to alienate any more viewers than he already has. So I thought that was kind of funny, and it just shows you that even opposition, who is running these, as they call them, like propaganda type channels, TV stations, are trying to go down the middle of the road. Because when you see statistics like we're seeing, that's why you see a very strong stock market, and at the same time, there with a strong stock market and a strong employment market, you would assume that big spike right here shouldn't be there. It just shouldn't be there because obviously money knows that things are kind of quiet, really. They're not going anywhere, and they don't want it to go anywhere. So what makes it spike like that is Mr. Powell saying, no, we're not lowering rates, and then at the same time the president says we need to lower rates, and then at the same time the GDP comes out and says that we're doing really well, and then and at the same time we see employment numbers doing really well. So if employment numbers are doing really well and the economy is doing really well with the GDP, the gross domestic product, then there's no reason to lower rates because that would only increase inflation. That's the problem. That's where the challenge comes in, is not instigating an increase in inflation. And so we're just going to leave it at that. That's today's view of the financials, news over the last, 24 hours. And that's what we like to do, is try to identify why these spikes occur or why something is going up versus down compared to our algorithm. But it always seems like our algorithm is always ahead of the curve anyway. So you can see right here, let's make it bigger there. You can see our weekly buy is way back here. And you can see our fast one started up in here, and you can see this is the dollar index, and it's just been climbing. In other words, it's acting like interest rates are not going down. They're going to stay the same. Hence that conversation about pairs trades and the $20 trillion Japanese pairs trade and the pairs trades in other places that are not exactly working as well as they should be. Let's put it that way. And so that's hedge fund talk for it's falling apart. Instead, they like to say, well, it's kind of sticky right now, or it doesn't have that savoir-faire. Hedge fund industry likes to be very polite, likes to be very gentle. It kind of has that rhythm to it. All right, let's go over and check out. Unless anybody has a question, let's go check out what the euro's doing this morning. Let's shrink that back down again. Right there. We'll put the euro over on the dollar on the J4X. That's the euro-dollar pairs trade. That's the second largest economy in the world. I know you have a hard time saying, what's wrong with Doc? Why does he keep on saying that when the news media keeps on telling us that China is? It's like, no, not really. If it did, their currency would trade a little bit more than 2.5–3% a day if it was the second largest economy in the world, and they wouldn't be in such debt, and they wouldn't be declaring bankruptcy all over the place, and so forth and so on. We can only follow the numbers, traders. That's all we can do, and follow our algorithms. And from there, the stuff that comes out in the media, we try to take apart and try to understand it more, why they do it and how they're doing it. Let's see. You can see it there. There's the euro. We'll put it up on the whole screen like so. You can see it's been gliding down. It is, I would call it leaky. It's not exactly crashing. I mean, this is, been relatively mild. We've come down from the 111 area down to, we've broken the 108 now. So over the last 4 weeks, it has dropped 4 big handles, which is impressive in the sense of, that weakness. But notice it's not taking out like a low here or a low there or a low there. They're not doing that. It's kind of just trapped in this area right in here, and I think we put it up on, let's put it up on the other chart, or the other platform. Let me just go to it and I'll swing over and show you what I'm seeing. And there it is right there. And it's actually, I see that this morning, it's actually encompassing that circle or that elliptic we were looking at right there. We'll make it larger so you can see it better. It seems to have been around here. We kind of think that at best it's going to fall into this area here. You know, the 106s and change. You know, they tried to get into the buy there, and the next day, on Friday, they threw it back into the sell, and then this morning, obviously they're moving down, and we're in that weekly sell. And again, they're not challenging these big major lows. They're barely being able to challenge that low right there. So we can just expand that elliptical a little bit further, like so. And it seems to me, I know it looks like a reverse head and shoulders at the moment. I'm sorry, not a reverse, a head and shoulders. And the shoulder over here seems to have, I kind of think this is it. It'll probably find a way to climb up in there when we get back into a daily buy and we start to see the green line moving back up through the manifold right there. That's the manifold. And there's the plus manifold right there. Once we see that, more than likely it'll be some firmness again. And markets are, like I said, anticipate down the road. And so they have to get comfortable with some of this. The only thing that I can say, again, and I don't mean to repeat myself, is that when you have statistics, you know, the voting statistics that are coming in from around the country, and the leading candidate is the former president, and we know what the economy did under him. You know, it was when he left office in 2020. Matter of fact, on 2021, when the existing president got sworn in, the GDP was 6.22%, and inflation was around 1.41. So when they see things like that, you know, it makes money say, you know, looking down the road, this guy's leading by anywhere from 8 to 10%. You know, we have to hedge ourselves. We have to do some buying. But one thing we don't want to do is any selling. And so that's where we really are. All right. British pound. Let's see what the British pound is up to. GBP, the Great British Pound. And there it is right there. And you see that also went into the daily sell on Friday. And it's playing with its kind of channel or box or consolidation that we've been watching. But we don't really see. We do have this too. It did slide into the weekly sell last week. And let's put that up on the screen. It had been in a weekly buy for. Let's go back and look at it. I just want to change that color. There's that mouse out right there. Let's put the bar in there. That one and that one represents it's officially in the algorithm's weekly sell. Oh, wait a minute. It's got to be pink. Weekly sell. Right there. Or is it that one? No, it's that one. There we go. Now let's tighten it up a little bit so you can see it a little bit better. And we'll see when it went into the buy. And there it is right there. It went into the buy down in the 120s, 122, something like that. What's that? 121, 75, 120. Anyway, it was in the 120s, low 120s. And it climbed all the way up to, when it went into that weekly buy. From there, it climbed all the way up to in here. I guess you could say that high of 127.94. Basically 128. And now it's, you know, it's been trying to get leaky. It's been trying to roll over. And that was, again, because everybody was anticipating these interest rate cuts. You know, and that's a major part of the pairs, and that's why they do pairs, and that's why we did the webinar on the pairs. I hope it's all making sense, isn't it, I hope? If anybody wants to just give me a thumbs up to know that you can hear me. Let me put the headphone set on to make sure I can hear me. Yep, I do hear me. That's cool. That's good enough. I just wanted to make sure I wasn't talking to myself. Sometimes it's like I'm in a dream and I'm talking to myself. Let's take a sip of tea since it's been almost 22 minutes now since I started talking. Excuse that sip of tea. All right. From there, we're going to go over to the Swiss. they're doing a little battling with the inflation at the moment. That's why we're seeing a lot more of this loss against the dollar. Uh, we always say we follow the markets. We're kind of Eurocentric about it. In other words, we always look at the markets like people outside the United States would look at it. And so you can see here, when the Swiss is going up like that, it's losing money against the dollar, just like when we go and look at the euro. Again, we're looking as it's dropping right there, that it's losing against the dollar. So in other words, we're looking at it like as if we're in the euro, or we're long the Swiss, or we're long the GBP, or whatever we're looking at. We look at it how those countries and those populations look at it, not how Americans look at it. Because we're not very, I can say this, America is not that much involved in the currency market, since we have a very, strong currency. And, it's always, we're using dollars. I mean, you try to buy a foreign currency in the United States, that they make it a complication. It's like 1965. I tried to go buy some euros one time to send over to a friend, and they charged me something like, let me think, what it was like. The euro was 120 something, and they wanted to charge me 127. Now, if you go into Westminster Bank, or you go to another bank outside the United States, and you go to try to buy a currency, it's like a tick and a half. It's dirt cheap. In the United States, they put a big premium on it because no one really uses them over here. So, let's see. So let's get back to the Swiss right there. And so the Swiss is losing a little bit against the dollar. It went back into the daily buy there on Friday right there. And it's in the weekly buy for the last couple weeks. Let's see if I can get that fixed. Let's put that green in there again. There it is. And there's the green. Just to show you, it just reminds you that we're through the zero line. That's what we do there. We try to that's why we put these lines in there. It's just you may not see, or it's not clear enough for you to recognize the fact that it went into the daily buy there. It goes into its daily sell there. You can see it's dropped underneath that point there. And so we just throw a line in there just to help you to see it. You see it goes into a daily buy there. You can see the strength, or at least its upwardly projection. And same thing here. It goes into a sell for a day, and then it goes right back into the buy. And you see that. And then at the same time, you have the weekly right there. Matter of fact, the weekly went into that sell back in the 90 area, up in here. Climbed all the way down to the 83-ish area there. And then they started fighting inflation. The central bank in Switzerland, the federal bank, declared that they were starting to fight inflation, and that's why the currency was moving the way it was. Another sip of the tea. Sorry about that, traders. So that's the Swiss. It's losing against the dollar a little bit. Nothing major. It's in the 86, which is fine. It's not challenging this 90 thing and so forth. And we can move that zero line right to there again. You can see it's been in the weekly buy. It started to go there on the fast algorithm. That's the blue one. And then the slow one started to go here. And it has not really done anything with it. I don't expect a lot of swinging around, but one thing is for sure, and that is that interest rates are just not going to drop as fast as everybody on the planet thinks they are in the United States. All right, from there, we bounce over to, I guess we'll put J4X up there, that's it, and we'll just put the Swiss on there so you can get a flavor for it in that platform. And there it is right there, and we make it large enough so you can see. And you can see that little pop that's going on, and you can see that the fast stochastic, in this case we have a fast stochastic and a slow one, which is about 3 hours behind our algorithm over here. That matches up to that about 2 or 3 hours. In this case it's a daily, so it'll take like 2 or 3 hours to adjust. Sometimes it takes a day. But it's better than anything else we can say on the public arena of indicators. So you see there, and now let's just make it again bigger. There it is. And so you see the slow is trading at 47.7, the fast is trading at 66.3, and that shows that strength that's coming in, just like over here. Same thing, the strength coming in. All right. Where do we go from here? We'll go over to the Japanese yen. See what the yen is up to this morning. We'll start off on J4X with that. dollar yen right there. You see dollar yen making that quick turn also. Same situation, 67.5 versus 51.2. So the yen is losing against the dollar there. And then we go and take a look at it right here, same way. And we'll put the yen in there. The dollar yen right there. You see a little pop. It went into that daily buy there yesterday, or on Friday, that is. And like so. And you can see we're still in that weekly buy right here. So it's not running away. It's that steady consistency. It is that steady consistency. What else can we say about the yen? Didn't see anything on the LDP today again, which is a good thing. Maybe they seem to have resolved that whole issue over there. And once that, we've seen how the situation with the LDP in Japan has had an influence on the currency. And we're hoping that they've kind of gotten their, I guess you say, the situation resolved in the sense where they've come up with a conclusion. That's the most important thing of all. I'm using hedge fund industry this morning vocabulary. As they would like to say, it's not today's work. It could be tomorrow's work. Exactly. All right. From there, we'll jump over to the Great Experiment. Let's see. They did close at a all-time high. I think it was Friday. Let's check and see. Yeah. Friday they closed at an all-time high of... What was the closing high? Not closing high. I'm sorry, not closing high. Closing the high, all-time close. There we go. I know I could get it in plain English. 33.15 is now the all-time closing price. All-time closing price. The high looks a little off from there about 2 weeks ago, but the settlement itself right there, and it pushed it into the daily buy 3 days back. Let's put that in there like so. Right there. And put that little green thing in there so you can see it to match it up. Widen it out a little bit more. And then that was Friday. Yep, that's Friday right there. So Thursday, I think it closed on Thursday too at a all-time close. That's what it did. It beat, it's 33.069, and the previous one was 33.045. And then on Friday, they closed it at 15, making it a good leap up over the all-time close. And then today, you can see they're taking some profits. It's backing off. We're seeing that. We've been in the weekly buy. You can see that there for a while now. 18, almost half a year, I think. Almost a little less than half a year. So our weekly buy started back in early September. So you're looking at basically September and October, November, December, January. And if we are still in a weekly buy by the, let's see, would that be middle February? If we do middle February, another week, by the end of this week, if they're still in a weekly buy, that'll be over almost a half a year. That'll be pretty wild. And it does that too. We've seen this product do it so many times. The Turkish lira, Euro Turkish lira pairs trade kind of can go on these. I want to call. I hate to use the word. I'm not going to use it because it's too aggressive. It's going to be hedge fundish today, and we could say that it has been enormously sticky like that. It does not retreat. How about that? Instead of saying it's rampaging, that's the word I was dodging. Rampaging, because that's very aggressive. Don't want to be aggressive speaking in hedge fund dialogue. It's basically, yeah, I would have to say it is extremely sticky. That's it. All right. And then from there, from leaving the Euro Turkish lira pairs trade, or what we call the Great Experiment, we jump over to, we look at the number one brick in the world. Now we drift away from the I guess you would say the major currencies. And we start to look at the action in the bricks. Unfortunately, they've lost a major player in the brick universe. That was the Mexican peso. So the second most powerful brick now is the South African rand. And I guess some of you might be saying, why isn't he saying it's the Chinese yuan? Well, the Chinese yuan is fixed to the dollar, so it doesn't float, and you don't really have a. It only trades 2.5 or 3% a day compared to all the major currencies. So even I think it's Switzerland, its currency trades 4% of the time. It's only 8 million people, and so with China having a billion plus people, its currency only trades about anywhere between 2.7 and 3% a day in the world. So between that and fixed currency and GDP not matching the action we're seeing, all those things, we can only follow China through its own actions. We can't, not what they say, but what actually happens, what they do. And that really kind of reflects that the economy there is just not what our what we like to call it in the United States. We call it our commercial media. How they think it's it's the number one currency, number two economy in the world. We look at, it's pretty obvious that the number two economy in the world is the European Union put together, with about 500 million people. It has a $21 trillion economy measured with a floating currency, which is the second most active currency in the world. That's the only way we can look at it. I don't know how to look at it any other way. Not what you tell me, not what you say, but what you do. And so when we see the yuan only trading, basically between 2.5 and 3 a day percent wise, and we don't see any real production out of their economy, and only when we buy things in America, we spend $500 billion a year on China, and they spend about 1.5 billion, 150 billion in America. The net is $350 billion comes from us buying things from them. And I'm sure that if we bought $350 billion from any country in the world, they'd look like the second largest economy of the world too. So that's the only way we can understand it, through those numbers there. All right. So when the South African rand is moving up right here, like these last 2 days, that shows us that it's losing against the dollar. And when it does that, at the same time, what we see is the what do we see? We see the gold and the silver and everything else go down in value. So in other words, when the South African rand is gaining like this right here, we see the metals gain. When we see the South African rand losing like this, we see the metals lose. Now in this case here, we saw some strength come into the South African rand, and let's go take a peek at what gold looked like in that same time period right there. And you can see it was rising. And then the last couple of days, you can see gold has fallen from basically $2,080 down to $2,000, $40 basically right now. Showing that weakness. We've been in a weekly sell since over in this area here that week. It went into the weekly sell. I guess it was right here really. And it's, it went into a buy there for the little pop, but the weekly wasn't able to alter itself. Now let's go take a look at, we put the South African rand up on J4X at this point. And we can also go take a look at gold on there too. Where is gold? Right there. And you can see gold doing the same thing. It was rising and now it's trying to break down. You can see the fast is at 41.6 and the slow is at 58. When this one's stronger than this one, things go down, and when this one's stronger than this one, they go up in value, like right here. And you can see, where this is behind, and you can see the little numbers there. It was at that 16, and when we go up to here, you can see it's at 32, and you can see that strength. So this is that characteristic of it all, and which is cool. It's a good tool. That's what we're trying to do, is we're trying to show you some public tool that will basically match up to some extent to our algorithm, which then gives you know traders an opportunity to have a better understanding of the direction of the market itself, going which direction it's taking. Giving you the trend. Now we'll go over to our beta. At this point, we look at both platforms. Not only do we look at this one here, but we also go over to the gold contract on our beta, which we get stocks and futures contracts very easily off of our beta. And there it is right there. And we just show you that. And the weekly is a little behind. It more than likely this might tomorrow be dipping down again. And you can see here on the daily, it did that same thing. It goes up, and now we're starting to break down. You can see it's breaking down there on the daily. And then when we look at our main platform, let's go back to that main platform again. Pop, right there. You can see it. Did it make it into the sell there? It did not. It was at 37. See that plot 1 is 37. You see plot 4 is 73. It's green there. And plot 5 is minus 73. That's the fast. But you can see the breaking down. And we're in that weekly sell here from that point there, telling you no, no, no. You can see how it went into the buy, went into the sell, went into the buy. And then now it's breaking down into that sell again. Let's take a look at silver. See what the silver is doing right there. And there's the silver. Silver's been in a daily sell from this point right there, 4 days back. And it's been in that weekly sell from basically this area here. We find it interesting that that silver gold pairs trade just cannot get a grip on itself, or get some, as we like to call it, get some legs. Be able to run. That's what we call getting some legs. Means it's getting some strength and is able to run. We don't see that. We constantly see the same situation where the pair. I mean, we're looking at gold, and it's only $100 off of all-time highs, basically. So it's less than 4%, or right around 4%. And then when we look at silver, silver's trading at 22.46, as you see on the screen there. Silver, is. Can you see that? I don't think you can. Yeah, you can. No, you can't see that. Let's see if we can move this over a little bit more. We go like that and try to move it over like that. And then we make it bigger. Does that do it? You don't see it there. Nope. Oh, there we go. Now we fixed it. There we go. And so you can see there it's at 22.46. And the all-time high is like 51. So it's like 50%, more than 50% under that pairs trade there of silver, gold, gold, silver, whatever you want to call it. All right, and then from there, we move over to copper. And let's see what copper is doing this morning. And there's the copper. And and let's do this too before we go stare at copper too much. Let's put the silver up on J4X. You can see there's that gold situation in the 2030-ish area with an all-time high of 2150 or so, I believe it is. And let's put silver in there, right there. And that same issue, it's just showing that weakness. It just doesn't have it. It doesn't have it. And we watch the South African Rand, as an answer to that whole fact to begin with. And that is that it's rising. Let's just show it to you again here. Oh, we can show it to you on the J4X. There's the South African Rand right there. You see it's rising. And so they're selling dollars. I'm sorry, they're buying dollars and selling South African Rand, which, again, with that, right there, that movement like that on the upside going on overall out of this whole move since I guess you could say, was about 7 weeks ago. And then when we go back to the gold, let's put gold back up on here somewhere. Let's do it on the J4X again. Show you the gold right there. You can see it's been trying to do that sound, kind of a leaky action to it, moving down, sinking. We'll put that there, shrink that down, grab that, and there's our copper. You can see the copper. I think this is. I guess this action here was they. I know what this was. The copper went into the buy when the CCP, the Chinese Communist Party's, or I guess you could call it the People's Bank of China, declared that they were going to do what do they call it? A stimulus. They were going to do 1 trillion won, which comes out to be about $120 billion. And so they were doing a stimulus on that. Now, that's not a lot of money since they've lost almost a third of their real estate market, which is, the real estate market or property market in China represents 30% of the GDP. And their two major real estate companies have declared bankruptcy and they are being liquidated. So they're losing a good slice of a third of their GDP. And so we can see, I guess this was probably like a flight to safety. This move right here, knowing that the CCP was putting money into it. And now you can see that after the initial statement that they're propping up, they're trying to help their economy, stimulate it. You can see it's starting to roll over. We went into that cell right there. And you can see we've been in the weekly cell since here. So they ran up, took out this area. We jumped into a daily buy, but we couldn't get into that weekly buy. So we like to call that, it's an old Wall Street expression, and that is it's a dead cat bounce. Has nothing to do with Mr. Schrodinger and quantum physics, but they like to refer to it more as because when the skyscrapers started to be built, or tall apartment buildings, people had pets. And even back 60, 70, 80 years ago with those tall buildings, when a pet would accidentally fall out the window, a cat a lot of times would live. Sometimes it would die. But a cat can fall 15 or 20 stories and survive and walk away from it, which is amazing in its own right. And so they would refer to it as a dead cat bounce. Even if it didn't live, it would still leap up on some level. In other words, the initial impact of hitting the surface and then bouncing up. And in this case here, we kind of treat this move here the same way. Where's that mouse at? Right there. We look at this and we say, this bounce is a dead cat bounce because it's only going to last as long as the money from the People's Bank of China is being poured into the economy. And obviously, $120 billion to them is not exactly moving them. It's and they don't have the money to do. So they kind of make it sound nice. They make it sound, wow, who would do a better job with the economy? Just came across the tape. 33% with the sitting president and 55% with the former president who's running against him right now. That's a monster number. And this is from one of those commercial, or what they call it, corporate news medias. That's from NBC, CNBC. That's a monster number. 55% to 33%. That's why we see strength in the stock market. Matter of fact, let's take a peek at what the stock market looks like right now, since no one's asked any questions. And there it is right there. There's the intraday chart. We're going to show you just the 900, or like we like to call the 0.78 Fibonacci of Tesla. And so that's this one here. You can see it's been in the, looks like the pressure has been down for a bunch of days there. I'm sorry, this is intraday. This bar represents 900 and some odd ticks. 936 ticks to be exact. We call it basically a 0.78 Tesla. Triple Tesla, I'm sorry. 0.78 triple Tesla. And so you can see that weakness there. We can see here on a 26,000, like that. It went into the sell on Friday. Oop, it's not moved that. Let's see if we can put that back in. Where did I grab that from? There it is, right there. So you can see there. I guess we can move that up even more, up to that point right there. There we are. And so you can see here it's coming off. It's going after the 0.23 at the moment, and this is a 26 1,000 tick intraday bar. And you can see it's jumped into the buy right there. And it's above right there. You can see that. And it's tried to lift up, and now it's rolling over again. And so it looks like it's going to be having those issues. And that's the stock market today. It's down a little bit from Friday's close of right there. You know, it's not the worst. Let's go back to that 900 because it makes, you know, a little bit clearer picture. Let's see, where was it? I think that's the close. Okay, wait a minute. That's the close of Friday, right? Yeah, right there at the I think it was 492, 4,972. That's what that was. That was the close there, and that's where it's at now. So it's basically almost unchanged, and you can see that weakness in it. Let's see. Now, let's look at the last of the metals complex. We'll go over and look at, right here, we'll take a look at platinum. We look at all four of the metals, major metals. And there's the platinum. You can see the platinum's been in that weekly sell up in here. It tried to climb up to get back to it there, and it just seems to be unchowed. See, that needs to be fixed a little bit. Let's fix that. There we go. And let's go to the default. There we are. Close. And there it is right there. You know, it's just showing that weakness. Today we are at 901. You know, platinum is not getting any strength out of it every time it tries. And it's been rolling over from that 1,040 or 50 area. What was it? Got up to 1,031. And we've fallen all the way back down to 883. Tried to climb back to the 950. It's rolling over again. You know, in other words, that weekly is telling us that that's a dead cat bounce too. You know, in other words, the strength is just not there. All right. From there, we go over to the energy sector and take a look at the energy. So there is crude oil there. We'll put Brent up on our beta, and we'll throw Brent up on. You see that little weakness we've had now since here at the top. About 5 days ago, we closed in a weekly sell last week. And let's take a look at J4X right there and put up Brent like so. Right there, there's Brent. Brent is trading in the 77s. It ran all the way up to about 80, 83.5, 83.6. And over here on the beta, there it is on the beta. It's been in a sell. That's the Brent also. And you can see we've been in the second week of a sell there in the Brent. And so whatever's going on with the oil sector, it definitely is not rampaging. We're going to use that word because, you know, it just shows you it's not going wild as much as all this noisy conflict is going on. All right. From there, we take a look at natural gas. And we'll do let's do this too. There it goes right there. Let's make that whole picture so everybody can see it better. You see it's been rolling over. And the fast is at 7.4 and the slow is at 15, showing you that there's a lot of weakness in it still. And then when we go like that and like that, same situation. You know, it's been in a sell about, was that 5 days ago? And you see that weakness there again very clearly. And then we jump over to our West Texas. We can do this. We'll stick West Texas Intermediate oil in the United States. Right there. And we'll just blow that up for you. Same situation, trading at 6.0 basically versus 15. So showing that weakness also. And then when we jump over to here, same situation, went into the sell there last week. It's in that daily sell. You see that pressure on it. And then last but not least, we switch to, and there it is, March crude. Same situation, weekly sell, pressure on it. So it has, you know, as much as we see all that noise globally, pretty much it doesn't seem to be reflecting it too harshly on the European continent or, you know, North America here. All right, and then from there we go over to natural gas. Right there, Mr. Biden came out with something. It didn't make a lot of sense. Trying to slow down our sales. That's why it seems to have stalled out. He did that on Wednesday or Thursday of last week. And at first it bottomed it. You can see that it stalled it out. You see the fast is at 21.9, 21.7 basically. And we, no wait, 32 now. And you can see the slow is at 25. So it's putting some pressure into what Mr. Biden has signed as an executive order. And then when we go over to the other platform, like so, where do we go? We go right to there. There's the natural gas. And you see same situation in the daily sell right there. Climbing into the weekly sell this week right there. Let's put the little circly thing in there so you can see that. Matter of fact, looks pretty tenacious. So the market's not taking that move that serious. They figured that it will be thrown away somewhere along the line before next winter. That's, I mean, remember, that's what they're watching. They're watching next fall. Or not next, I'm sorry, this fall. They're watching this fall coming. They're anticipating this fall in November and September, and so forth, and October and December. Oh. And so there's the, and let's put it up on the beta. Right there. There's natural gas. And let's put it up over here. Like that. And that's the natural gas. And then we turn it on over there. See that push down? It does not care. It's in the weekly sell, and you can see it's the daily sell. The pressure's on. So they're looking, again, as usual, they're looking down the road. That's what they're supposed to do. All right, the last thing we look at, well, on the energy sector, unless someone wants to see something like a stock or something, like ExxonMobil or whatever, it doesn't matter, Royal Dutch Shell. But in the end result is that you can see it right here. Here is a company down in Spain. Like that, like that. Why are we not getting it? Or is it somewhere else? I don't understand. Normally we get that. Oh yeah, that's it, right there. Okay, so you can see here it's trading in the what is that trading in? It's trading in the mid to low 24s. It's come down from 28 over in here. And then what we do is we go over to J4X right here to have even a better view of it. This is a gas company in Spain that we follow because it's one of the only ways we can see what the prices are in Europe through the stock action of the company itself. There it is right there, trading at 24.24 with a 24.30 offer. You can see it right there. It topped out at 28.3. And you can see today we have the fast stochastic at, what is that, 9? And the slows at 13. Or is that 2? That honestly looks like 2. Let's see if we can widen this or something. Let's see if we can, or how do we do this? I guess we can go like that. Yeah, it's at 2.8 versus 13. So that pressure is on. And that's a good thing. We want to see the prices in Europe slide down so that people can afford to heat their own homes and cook food and so forth. Then over here, the best we can show you is just the natural gas. And and on the beta side of it too. Let's go back to that beta side right there. You see the weekly. It's been in a weekly sell for a long while now, 10 weeks. From the 2,800 area or $28 area, or I guess it's probably in euros, so it's 28 euro area down to the 24 euro area. All right, where do we go from there? I guess that's about it, traders. We showed you a little stock market. We'll put stock market up in there, just a quick look, just a general flavor of it all. Since no one asked, I'm not going to go any deeper, and we'll get out of here. So this is Doc from North America, and we will see you all same time, same channel tomorrow. And there is the there he is right there. There's the stock market on the intraday of, let's see, which box is it? It is the 936. It's the two-thirds Tesla, basically, a 0.78. And you can see it's driving down towards the lows of the day right there. There was the low of the day right there. You can see it went into the sell there and so forth. And let's go the other way. And you can see here we've been in the sell from something like right there. I guess we've been in the sell right from there. And you can see it slid down from the 74s down to the 67s. All right, traders. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Have a safe and smart trading day, and we'll see you tomorrow on Tuesday. Ta-ta for now.